and the key question now is whether PNB can protect its profitability in the second half. To decode all of this, Harsh caught up with the MD and CEO, Mr. Ashok Chandra. Listen in to a slice of that chat.
We have already given some broader numbers. I think we need to wait for the final audit to happen, and then that granular data will be shared to everybody. But yes, the total business also, if you see, we have posted a total growth of business growth of 9.57%, and credit growth YOY, if I put it in the that perspective, it is around 11% YOY growth is there. And that growth has come from all the segments. I think we will share those numbers once the audit and final result comes. But we are seeing the momentum which was there in the Q1 and Q2. That momentum has been continued in the Q3 and in Q4 also. With that momentum is going on now.
A different level of momentum, if I can call it that. Q4 generally is a seasonally stronger quarter for you. Is therefore the trend going to last all through Q4 or even perhaps get better than this?
See, the impact of the GST and the simplification of the entire the process which has happened and the RBI rate cut which has happened, I think all those things has brought a lot of activities in the economy. And we have seen in the Q2, the GDP was growing at 8.2%. So that indicates that, yes, there is a good momentum and good activities are happening. And definitely, if the GDP is growing at 8.2%, I think the credit growth has to happen in the economy. And we are all in line with the credit growth which is expected out of this GDP growth. So we will see this trend continues for a longer period. And this is not for 1 quarter or so. This momentum and this the activity which is happening in the economy, I think that is going to continue for a longer period.
Very interesting. So there is, viewers, there's clearly underlying confidence that this momentum will continue. That's really the essence of it. So let me talk about deposits now, Mr. Chandra. Deposit growth hasn't kept pace. I know system liquidity is fairly good. Your CD ratio also looks fairly good. But why is it that deposit growth pickup is not happening despite system liquidity being good? Is it just competition? Is it going to happen with a lag? What can we expect?
No, this was a very, very conscious decision of the bank management to contain the deposit growth because we had that CD ratio of around 72%. So there was enough room for us to grow in the credit front without very faster growth in the deposit side. And very consciously, we have kept that deposit growth at 8.5% because there are different routes of funding that credit, and that routes we have operated in this particular quarter. So absolutely, there is no dearth of deposits, and there is absolutely no concern of any liquidity issues in the bank. We are very, very comfortable as far as the liquidity is concerned. And as far as the deposit mobilization is concerned, bank is doing very well in the CASA and overall the deposit front.
So loan to deposit ratio, are you expecting that to continue to inch upwards? And if so, at what point would you feel that you'd be most comfortable where the loan to deposit ratio is concerned? Because from 72 now, you're inching towards 75 and very quickly.
Yeah, I think our goal is that somewhere we should reach around 77-78%. And we are aiming for that growth to happen. And I'm very sure the activity which are happening in the bank and the outreach activity which is happening in the retail, agri, MSME, pan-India, all my 10,228 branches have been activated and they are contributing in the business. And that gives me a lot of confidence that this credit growth will continue to happen in our bank. And definitely, we will be in a position to reach that 77-78% of CD ratio in another 2 to 3 quarters.
So great. You've given us a timing to work with as well. Understood. Sir, you know, the last time when we spoke, you spoke about how the NIMs could be softer, if I can call it that, if I can use that term. I just wanted a clarification because post that, in an analyst meet, you seem to suggest that NIMs will largely remain range bound, 2.8 to 2.9%. But if I recall our conversation, you had suggested that NIMs will cool off a little bit. Talk to us about the margin trajectory, and I'm not talking about Q3, sir, in particular at all. I'm just trying to understand whether full year FY26 margins will likely be softer given the repo rate cut. I mean, it's understandable, but I'm just trying to quantify the impact, if at all.
See, the impact of this another 25 basis point cut in the repo, definitely that has happened in all the banks and including our bank, and we are seeing that impact to happen because the 125 basis cut which has happened in the entire calendar year 2025, to that extent we have not reduced the term deposit rate, and we are very mindful of cutting the deposit rate because we know that the deposit at around 6.5, that itself is a fine rate, and we are holding to that rate. If you see our deposit rate in the Q3, I think we have not cut the deposit rate to that extent. So that being the case, definitely there will be some impact on our NIM. The guidance which was there, 2.8 to 2.9, definitely I am expecting that somewhere around 2.7 to 2.8 in between we should be there now.
Okay, that's the word coming in from the top boss at PNB, with shifting focus to another